What do you make of market performance today?
Well, we had a positive session. Shares were running back up. We're not too sure whether it's bargain hunting or just investors hunting for growth or just flight to quality. Nevertheless, it turned out well. A couple of dips as Diamond Trust looking to find its space again after going XOL, but largely positive session.
All right, the exchange rate continues to be something that is of a bit of worry. The central bank's been very active in the market, and at least today it's helped to buffer the currency by a little bit. But is it becoming quite a significant worry?
I think it is. I think it is because it is tied closely to the issue of inflation, and there's quite a bit of money supply out there. There's quite a bit of liquidity. So the central bank may need to mop up, not just to shore up the shilling, but also to bring prices under control and bring inflation down.
All right, what we have seen is that many investors who weren't sure about the performance of equities had moved to government securities, particularly the banks and other institutional investors. Those securities now have higher yields because of inflation and other pervasive problems within the economy. Where do investors go in a situation like this?
Well, depending on your strategy, I think equities still have a good outlook going forward. Even if it's looking at it as an inflation hedge, you've got some plays over there as well that makes sense. For example, the commodities like Sasini. Sasini just brought in its half years. They look good, and we assume and that may look like taking Sasini as a bellwether. Other tea stocks may look to perform well. You've got financial institutions. Earnings could come from this time around from foreign exchange rather than from bonds. However, we know their bond portfolios are still at risk, and right. And perhaps even their loan portfolios. So just be careful about the stocks you pick. I think this time around stock picking should help in developing a strong portfolio.
All right. Well, obviously, Sasini is one of the better performing stocks today alongside Express and Pan-African Insurance. But I want to talk about Barclays and what they're doing by way of a share split. They are one of the more profitable banks in Kenya. Effectively, they're going to be diluting the shares of existing shareholders, trying to broaden their base. What does that play here?
Well, the bit of that move is that when they move it from the 60-70 shilling range to 15-20 shilling range, they'll be able to bring in more people who are able to participate, and that may actually lead to a better price to book value or even price earning ratio than what we have right now, and that is perhaps why you're seeing quite a bit of demand as we move towards the close of that corporate action. But you're right, it will increase the number of shares out there. But you see Barclays is more than 70% owned by Barclays PLC, so there's still quite a bit of, the stocks out there that are closely held, it's such a huge proportion of everything. So perhaps it will just bring up liquidity to levels of where KCB, Safaricom equity is.